So a little story about GameStop. Back in the day, I don't know, a few years ago, we used to call GME, GameStop, GameJunk because it was pure garbage. You have to figure, as video games went digital and you download the video games, GameStop basically was non-existent. Like there was no need. You're going to go to the mall and buy a video game? Why? You could just download it online. And their CEO at the time was horrible. His I think it was his son actually went on Shark Tank, and the sharks grilled him, and they're like, "Your dad's the CEO of GameStop. Why don't you get money from him?" And he's like, So you knew, like, again, the family, the CEO, the management, the business model, everything was horrible in GameStop, and it was like the stock just went lower, right? They would try to like fidget earnings and stuff like that, but the stock had no hope. It was like downtrend for years. So this move that we're seeing in GameStop, it's up another. Oh, it just spiked $8 in the last 5 minutes. It's up 58%, $25 right now. It literally just spiked $5 in 5 minutes. Look at that. I don't know if you guys can see that there. But that's the chart of it, and that 5 minute candle. So why is it having this parabolic move and such? Citron, famous short seller. I like these guys, by the way. A lot of the short sellers are really smart. Obviously, it's hard in a bull market to be a short seller, though. They came out once GameStop had the initial pop about a week or so ago, and said GameStop's going back, I think they said to 20, maybe it was even lower, per share. We'll have a full report upcoming, live video stream. And then we had Monday, MLK Day, Tuesday, I believe it was Tuesday or Wednesday, was the inauguration. So they tweeted out, and they do all this, via Twitter. They tweeted out, respect to the new president, we won't be live streaming today. We will follow up tomorrow. So once that happened, the stock started ripping because the Citron, the short seller, they were already loading up on puts. They already have their short position on, and usually when they come out with these reports or talk about a stock, the stock will dip, right? If they say, hey, it's, a loony move in the business model and the stock's going back to 20, they'll load up on puts, short stocks, sell calls. And then as the stock goes lower, as everyone, it starts getting media attention, they'll cover their short and make a boatload of money. And we're not talking like 10 contracts or 100 contracts. We're talking, thousands of contracts in the options market, multi-million-dollar positions. So the following day, they set up their live stream to talk about GameStop, and their internet connection stops. So the gentleman from Citron, he's set up and he's about to talk, and their internet connection stopped. So therefore, they could not share their short thesis with everyone. So as soon as that happened, the stock started ripping again. And then today, Citron is apparently out of ammo because they're coming out talking about GameStop, but they're really not showing any intel. So they're probably readjusting and either they had to cover their position, they got margin, well, they covered, they couldn't take the pain anymore or what, but, oh my God, is it halted? It's up 69%, it just got halted. It's 72.82, up 69% now. You have to figure, the calls, it only goes up to the 60 strike calls, okay? So the first thing about that is, if you're short the calls, let's say you short the 60 strike calls at $1, and now the stock's at almost $73. Those call options are now $13. So now you're having to buy back those calls that you collected $1 credit at $13 you're paying for them. If you're short stock, oh God, I mean, that's horrendous. If you're long puts, those puts are at zero, right? Or down massively in value, nearly worthless, if not worthless. So this is just causing, blowouts. And this is why you have a parabolic move. And if you look at the volume, you see how the volume's accelerating as stock goes up. It's not necessarily people are buying the stock, it's that they're forced covering. So the brokers are buying the shares for them at any price, at the market price, I should say, causing the stock to continue to go up. So that is the move on GameStop. To be fair, I tried buying a bear put fly on GameStop. I think it was like 35 strike puts earlier in the week for a 5-to-1 risk versus reward. That trade didn't work out, but I only risked $50, so I'll take that any day, right? Risk 50 to make 250. But holy crap, what a move here, and GameJunk, GME. Subscribe, like, leave a comment, follow me on Instagram, Lance Ippolito, all that fun stuff, and I'll see you in the next video.